different ways and things that we can do in order to ensure success. Our founder, Klaus Schwab, the founder of the World Economic Forum, has said the changes unleashed by the Fourth Industrial Revolution are so profound that from the perspective of human history, there has never been a time of greater promise or potential peril. And I think that you've heard in the opening remarks this morning a sense that we're at a really peak inflection time. Peak inflection time. We opened an office in San Francisco focused on tech policy last year. And what we do there is we examine not only blockchain and distributed ledger technology, but also artificial intelligence, IoT, drones, autonomous urban mobility. The intersection of these technologies is the context in which blockchain is being deployed. We cannot examine this technology in isolation. What's really important is to consider the effects on society that it's going to have when its transformative potential is ultimately realized. We think of blockchain as a foundational technology. And what does that mean? That means that unlike a technology like drones, for example, where you're really operating in a linear vertical, you're looking at issues of transportation, supply chain, etc. Blockchain has the potential to transform entire sectors beyond fintech. And this, I think, is very important to understand. What's most known about blockchain is, of course, Bitcoin. At this time last year, we were in a very different place in time. Cryptocurrency value was on the rise. There was a tremendous amount of hype in this space. There was a flood of investment money into the space by both professional investors and the average citizen. And what we saw was a reckoning, a reconciliation of that over the course of the next few months of last year, leading into the beginning of this year. At the forum, we were very happy to see that. As you've heard already this morning from others, we believe that that rationalization was essential to push beyond the hype and focus on the actual use cases and potentials of the technology, as opposed to just the wealth creation that was generated in the few months of last year. The forum issued a study about 2 years ago on blockchain technology, and what we found is that this technology has great potential to drive simplicity and efficiency. We consider ourselves pragmatic optimists of this technology. We're pragmatic evangelists of it, which means we do think it is going to wind up becoming the backbone of many systems. However, we also think that that will take time. We don't think it's the kind of thing that will happen overnight. We think it's going to require a lot of trial and error. And this is not different from any other technology that's emerged and become quite cemented in any system. The period we're seeing now of a lot of assessment, initial evaluation, applications, and use cases is common. The fact is most of these use cases, most of these attempts will fail, and that's fine. It doesn't actually reflect the true potential of the technology. So it's very important to separate not just the hype around the wealth creation, the meteoric rise of Bitcoin, for example, last year. It's also important to understand that failure in this space by certain applications does not indicate the technology itself is a failure. Now, at the same time, we believe DLT is not a panacea. Technology is not a silver bullet, and it never has been. And it's important to recognize that blockchain is suited for certain kinds of problems better than it is for others, and we'll get into this in a moment. Applications will differ dramatically, and digital ID is at the core, the basis, a foundational layer of all these applications. Now, I want to focus on this last point, which is that deep collaboration, we believe, is essential to unlock the most impactful applications. It's still very early days of this technology. So here we have our medieval knight with his dial-up modem. This is the phase that we're in to some extent with this tech. A lot of the early problems are being solved. So here are 3 barriers to why you haven't seen an explosion of adoption all across the world of this technology. Network dependency, shortage of talent, particularly in the developer space, interoperability. Now I'll note that these 3, there's a tremendous amount of energy being placed upon them, and we feel that they are very short-term, possibly medium-term barriers. The last 2 are where I think you've heard this morning, and I think the focus of the work that you're all doing today, very important work you're all doing here. One is failure of imagination. So a lot of times when new technology emerges, it's immediately pushed into existing paradigms. So we think about the way that we imagine money, the way that we imagine payments, And we imagine that we need to push this new technology, shape it and mold it, so that it amplifies existing models, whether those are business models or regulatory models. And I'm here to argue that's not true. I think that if we suffer from a failure of imagination and we're unable to unlock creativity in this space, we will stifle innovation. And that innovation is what can support principles like financial inclusion, access, and empowerment of citizens. And finally, as noted, these frameworks are an area of uncertainty, particularly in the legal and regulatory environment. Why is regulation important? So I give a lot of talks to entrepreneurs in this space, and many of them are quite negative on regulation. They would like to see no regulation in this space. They'd like, in their minds, that provides them with some sort of ability to innovate, that regulation would perhaps chill. I don't believe that's true. I actually think that regulation can provide a framework or barriers, parameters within which to operate that can actually lead to enhanced certainty. Without that kind of framework, you're building on quicksand. Now, as noted in earlier remarks, we have seen that jurisdictions that are friendly to blockchain, it doesn't mean that they are entirely permissive, there's a difference, but that are blockchain friendly are seeing quite a bit of innovation and activity in this space. And that innovation and activity is business. It is bringing money and dollars and yuan to that space, to those countries. And you're seeing this in particular, two countries cited are Switzerland and Singapore, also Israel and other countries as well. Countries that are hostile to this, again, not that they're banning it necessarily, but that have expressed some hostility towards the technology, are seeing flight of industry out of their jurisdictions. Now, it's every jurisdiction's decision to what extent that matters, to what extent of GDP that's going to be relevant, but it is an observable phenomenon and something to be quite mindful of. And why does all of this matter? At the end of the day, it's about consumer confidence in technology to some extent. Now, I would argue that blockchain, like the internet, when it's truly embedded in society, will be largely invisible. The applications built on top of this technology, like the Googles and the Facebooks and the Amazons and the Alibabas, are what we'll actually see and hear more talk about. Okay, so let's pause here for a moment. These are three characteristics in the blockchain for social impact, otherwise known as blockchain for good space, that we have seen the focus of the bulk of the experimentation. Immutability, transparency, and autonomy. So what does that mean in terms of what is different in a blockchain-backed world versus in an internet world? The first, immutability, is that right now you have silos that drive the need for reconciliation. So I have some information, you have some information, we have to constantly cross-check with each other to ensure that our information is the same or at least is compatible. Blockchain can eliminate the need for that reconciliation by providing a historical single version of the truth. So what that means is we can provide access to the same ledger of record, the same transaction record, to all parties that would choose to engage in a particular blockchain. And why does that matter? Well, that can obviously lead to efficiencies. It can also lead to what's called the ability to operate in a trustless environment, which I find this word trustless to be quite confusing to many people. It doesn't mean that you don't have trust. It means you aren't required to necessarily trust another party with whom you're doing business or with whom you are engaged in some sort of value exchange or transfer. Because the immutability of the record is sacrosanct. This also, as I've touched on, is transparency. So right now, there's different information between market participants. Now, we think about this in the blockchain for good space most often in terms of empowerment. Citizen empowerment by individuals versus perhaps companies or even central authorities like a government. And what can happen here is that because there isn't transparency, you have a lot of increased regulation. Money is one of the most regulated spaces in the entire world. How we think about money, what we can do with money, who can make money, it's a very heavily regulated industry or sector for reasons that are perhaps obvious. It's core and critical and fundamental to our operation as an economy, let alone as a nation. But part of the reason for this regulation is a lack of transparency, and blockchain can address that. It can eliminate the imbalance of information and increase cooperation. And one thing we're seeing is cooperation between businesses and regulators. We're seeing this in the agriculture space quite a bit, where supply chains with some sort of food product, let's call it, that are running through them, the regulator has access to the information about that supply chain. So they can track from point to point where these food products are coming from and where they're going. Now this eliminates the need for certain burdensome inspections, etc. And you can see applications of the same kind of philosophy of transparency to other spaces as well. And last, I'll talk a bit about autonomy. So the lack of trust I mentioned, there are many cases where you do have a lack of trust. This could be between nation states, it could be between competitors in a business, it could be between citizens and their government, depending on the context. And because of that, everybody kind of agrees to provide some sort of central figure, whatever that body is, oversight. Now, I'm a lawyer by training, so I think about this in the context of contracts. And at court, we allow a court to adjudicate contract terms where there is confusion, a lack of trust, or a dispute between parties. So what can blockchain do? You may have heard of something called smart contracts. These are self-executing contracts. When certain terms are met, the contract executes itself. There's no need for policing of the terms. It's something that happens automatically. And what this does is it eliminates, again, some of the need for this adjudication, to some extent arbitration. So we're seeing court systems around the world quite interested in this technology and what it might mean. We're also seeing a tremendous interest in this from the legal community, as you might imagine. So in the blockchain for good space, we're seeing these three broad areas of engagement. New ways to build trust, new ways to pay or give, and new ways to address social problems. So what are some examples of these? We're seeing increased attention on failure of liquidity. So in African markets, for example, there's a tremendous failure of liquidity. It costs a tremendous amount of money to move any sort of currency from market to market. And what can help with that is a digital currency. That can actually ease the friction, reduce the cost of moving money from place to place. We're also seeing a lot of central banks experimenting with interbank settlement payments or transfers, and commercial banks, I should add as well, have done quite a bit of experimentation with interbank settlements, especially cross-border payments. We're seeing a lot of activity in digital identity, whether it's providing refugees with identities or migrants who aren't necessarily refugees, the provision of services. So there is a program out of Jordan working with Syrian refugees that's focused on providing them wallets, essentially, that enable them to purchase from refugee camp stores the goods that they and their family need. This empowers these people who are otherwise living in marginalized ways. We're also seeing differences in ways to build trust. So voting is an example where we're seeing some experimentation here. I think that voting is tricky. Anytime that you are meddling in democracy, you need to be very cautious. But we are seeing that in situations where a sheer vote count is important, accusations of ballot box stuffing, for example, you can track on a blockchain with relative ease whether or not a vote was actually made. And then you can observe over time if there's a big discrepancy where suddenly a gigantic amount of votes, for example, are shoved into a ballot box situation. So these are three just examples of areas outside of fintech where we're seeing some of these applications with success. I'll quickly, or more quickly, run through some of these use cases, and I'll leave it up to the translator. Land title and property ownership, and you have some experts in governments who have experimented with this. Financial inclusion, track and trace, prevention of fraud, voting, as I mentioned, microinsurance, so similar to microfinance or micropayments, we're also seeing microinsurance. So it's unsurprising that as markets develop in places where previously you had maybe barter situations, you are seeing the provision of insurance as an important measure to protect various parties. Cross-border everything, transfers, data flows, payments, etc. This is a kind of obvious case of where this might be a very useful technology. Delivery of social welfare, charitable de-risking, governance, new governance models that are more inclusive, that really take into account citizens' needs, and then grant management and increased accountability. The last one is an example. There's a lot of concern about charitable diversion of funds. So if there's a disaster, let's say money comes flooding in to support the survivors of the disaster, but it's unclear what that money is used for. So it's been a perennial problem around the globe in disaster situations. And a lot of money that could have been used for recovery is actually just kind of abandoned in situations that are not of the highest optimal use. A blockchain can help with that as well. You can actually create metrics around when funds are released using this smart contract technology I mentioned as an example. And you have that way an ability to have more control over what and when actually happens with funds that are deployed charitably in certain parts of the world. Okay, and so here, just some images again to reflect some of the use cases where we're seeing the most prominent experimentation. Voting, cross-border payments, land titling, deed payment, and supply chain. I'll pause on supply chain for a moment. The integration of blockchain technology with IoT is something about which we're tremendously excited. When you think about the explosion and the sheer explosion of IoT devices, whether they're smart home devices, chips, traffic light sensors, whatever it might be, there are IoT devices in proliferation all around the world in various cases. The securing of the data from those IoT devices on something like a blockchain can provide enhanced security and accountability and transparency as noted, which we think is a really exciting development. One example in the blockchain for good space is a company that's looking at diamond mining and actually ascertaining whether or not a particular diamond, for example, was mined in a way that adheres to international principles that are against forced labor or slave labor, etc. And using an RFID etching on a particular diamond can actually track that mineral from the point in time it's mined from the seam all the way to the consumer. And these applications are very interesting in other spaces as well. So why does regulation matter to kind of bring this all together? Without regulation, what are we actually tracking in a track and trace space? The diamond example I mentioned is based on an international process called the Kimberley process. In the United States, we have a very active Food and Drug Administration that tracks everything from what is considered fresh, what are expiration dates, etc. And without that, we are unable to actually ascertain what do we need to track and trace. So the intersection, the collaboration between regulators in the agriculture business in the United States with blockchain technologists has proven to be extremely important in providing meaning to the use of this technology. Here, it's about digital identity. So we've seen countries move birth certificates onto the blockchain. I talked about refugee populations. The land titling components are important. Places in which people who are otherwise without identification, they can't really access a lot of services, whether those are social welfare services or banking services. So in a lot of places, it isn't so much the lack of access to a bank, because with mobile devices, many people have that, right? With this device, you can do an awful lot, even if you're not ultimately connected. It's the lack of an identity. They can't get through KYC, they can't get through anti-money laundering provisions, they can't be vetted in the correct ways that are appropriate for them to actually get access to the banking system. So provision of a digital identity is something they can carry with them in some certain circumstances that can actually provide access to citizens to entire swaths of industry to which they didn't have access before. So I think of regulation like this big gorilla cradling this little kitten of this new technology. If done correctly, it can shepherd it and guide it and help it grow into a full-fledged being in really transformative ways. If done incorrectly, it can crush, kill, stifle the technology so that its potential cannot be realized. And finally, last note on collaboration. If we all leap together into this new world and we embrace its potential rather than being afraid, we will go a lot further than if we operate in isolation. Thank you so much.